Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Wednesday, May 27, 2026. The Dow printed another record. But this wasn't your typical risk-on party. The S&P 500 basically held at record levels, and the Nasdaq barely budged. Why? Because leadership split, money rotated hard while oil collapsed, and the AI winners? They didn't move as one. Look at the S&P 500 heat map. It looked like two markets at once. Half the board green, half red, but in clear clusters. Consumer discretionary and healthcare popped, while semiconductors leaned red. Well, except for MU standing out as a bright exception. And the megacaps split too. Some lifting, some acting like anchors, so the index stayed steady, but participation looked messy. That heat map pattern? Pure money flow. Capital rotated away from crowded high-beta tech, semis and high-multiple software, and straight into steadier pockets, like consumer, healthcare, and select communication services led by Meta. Energy was a clear laggard as crude sold off hard, but that oil move fed an inflation relief narrative, helping the broader tape stay calm. So, here's the tension the market didn't resolve today. Can we keep printing new highs if semis and software don't do the heavy lifting? The index is held up, mostly because a handful of megacaps and rotation beneficiaries did the work. But make no mistake, there was real damage in parts of semis and cybersecurity. It felt controlled, professional de-risking, not panic, but it proved just how heavily this tape relies on a few names. On the chatter front, nothing flagged as confirmed gossip, but the tape clearly reacted to headline-sensitive oil narratives tied to U.S. iron dynamics. Traders also leaned on positioning-style excuses for the weakness in AI software and parts of semis. Remember, that's color, not proof. Treat it as unverified context, not a hard catalyst. Meta was one of the session's key buoys, up nearly 4%. When Meta leads while semis fade, it reads like rotation within growth. Not a clean risk on tech stampede. It helped keep the Nasdaq and the S&P steady, even as other big tech and the AI complex looked incredibly choppy. Amazon climbed roughly 2.5%, and that mattered. Why? Because it did real index lifting work. We saw selling in semis and software, but Amazon's strength helped mask it, keeping the broader market from slipping. Today's message wasn't buy everything, it was buy the rotation winners. Qualcomm was the loudest red print in large-cap semis, dropping over 6%. The street frames this as a specific hit, one traders used as an excuse to reduce exposure across the entire semi-complex. After a move like that, tomorrow is all about whether it stabilizes or if the weakness keeps bleeding into peers. Micron was the semiconductor exception, up over 3.5%. With so many chip names leaning red, Micron being green is a clear selectivity signal. The real story here? Money wasn't leaving AI broadly, it was just narrowing into specific exposures, like memory, while the rest of the semi-complex got trimmed. CrowdStrike dropped nearly 4%, and it wasn't alone. The whole cybersecurity cluster was offered, matching a broader weakness in software infrastructure. In today's context, CrowdStrike became a real risk appetite tell. When it's sliding while the indexes hold near records, that reinforces that today's strength was highly selective and definitely not broad-based. Exxon dropped just over 1%, as energy sold off alongside crude. Oil fell more than 4% today, driven by U.S. iron developments and whispers of a ceasefire. It's the perfect mirror image of the day. Lower oil helped the broader market mood through inflation relief, but mechanically, it hammered energy equities. Looking ahead, the focus shifts to next week's high-impact U.S. data. ISM manufacturing on Monday, then JOLTS, ADP, ISM services, and Friday's big May jobs report. Meanwhile, U.S. iron and Strait of Hormuz headlines remain a massive volatility switch for crude, feeding straight into inflation expectations. Going into tomorrow, the key read is leadership. Do semis stabilize, or does megacap internet keep doing all the heavy lifting? Let's wrap it up. Records on the surface, rotation underneath. The Dow led, the S&P held steady, and the Nasdaq stayed muted. Why? Because money moved, it didn't surge. Semis and cybersecurity were the obvious pressure points, while a few megacaps and rotation winners kept the tape upright. Tomorrow, watch to see if leadership broadens out, and keep a close eye on oil, because right now, that's the ultimate mood setter. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.